Hi friends, I'm back with one more video. So today we will be discussing about the intraday straddle management. So I am planning to start with the intraday trades also. So the first video on the intraday would be the straddle management. This is a sort of rule based adjustments, and this is the adjustment number 1. This is going to be like unique adjustments. I think majority of the viewers who are watching this video, I'm not sure whether you might have come across this type of adjustment, but this is not my adjustments, because I mean this is basically like few of the the successful trader use these adjustments for the intraday. Okay, so straight away I'll take you to the to sensible. But looking at the presentation, this is the straddle management, and this is more of a rule based adjustments. Okay, so now what I'll do, so we all know what is straddle. So if you want me to again discuss what is straddle, so this is basically at the money. We see the market stands at 36,200. You can go for at the money straddle, but that doesn't mean that you cannot have a straddle of the in the money or out of the money or near the money. So this is all depends on your view. Wrong to say that straddle is always at the money. For the demonstration purpose, I'm just taking the at the money, but I've made a series on straddle, so wherein straddle can be in the money, it can be near the money, it can be at the money, it can be OTM also. Okay, so for the demonstration purpose, what I'll do, I'll just take this straddle as an example. Okay, see, for the demonstration purpose, what I'll do, friends, I'll make this as 400. See, stay with me. See, again I'm using the word stay with me because I literally wanted to give you that and holding. Okay, so for the demonstration purpose, I'm just making this premiums for 400 so that it will be like very easy for someone to understand. So let's say you deployed a straddle and your premium is like 400 for the put and 400 for the call. Okay, let me show you. See, this is the original iron straddle. So there is no difference, right? This is 350 and 385. I'm just making it 400. Just for the demonstration purpose, so that the example would be easy, because this is a tricky adjustments. I would not say tricky adjustments, but sort of. One second. See, again I think this will not work, friends. Okay, because the profit is showing more here, so let me take it back to the normal straddle, short straddle. So I'll take the same premium. So what you have to do is, okay, let me unzip. Okay, now what you have to do is like take the calculator. Okay, so what is the premium you got? 346. So this requires some sort of calculations, friend. This requires some sort of calculations, right? The consolidated premium you received is 731. All right, 346 plus 385. So what you have to do is like, this is more of a intraday. Okay, this is more of a intraday. So you have to know. See, when I started this slide, the presentation saying that this is more of rule based. So what you have to do is like, you got 731 consolidated premium from your call and put. So you do one thing, divide it by 4. So there is no particular strict logic saying that it has to be 4. So I'll let you know. So reason why I wanted you to divide it by 4 is like, I'm just telling you from a conservative trader perspective. So if you are a sort of aggressive trader, you have to just divide it by 3. If you are super aggressive trader, you have to just divide it by 2. But I think ideally we should go for divided by, I'll just go for 4. That's it, right? 182, friends. 182 is the premium. So let's say this is your straddle. The moment market goes downside 182 or upside 182 points, so you have to start your adjustments. Got it? You are with me, right? So far, that's it. So basically what we are doing is, you took the consolidated premium, divided by 4 is 182. So you are not supposed to do the adjustments until and unless the market makes a move of 182 points upside or 182 points downside. There are few exceptions. I'll let you know after the demonstration. Okay, now what is your current market? Your current market stands at 36,200. All right, so what I'll do for the demonstration purpose, what I'll do, see, I'll go to this thing. I'll say press 36,200. Okay, 36,200 is equal to almost like 36,382. So what I'll do, I'll 36,000. What was that? I'm just trying to 382. Okay, 382. So let's make it 380. Okay, let's make it 380, 33,380. Okay, let's say Bank Nifty made a movement of 36,380. So what did I say? We initially we said the moment Bank Nifty goes like from your current market price, if it makes a movement of 180 points, so we have to do the adjustment. So what adjustment you have to do is, okay, let me take the epic pin. So now you should know. See, whenever market traveled from here to 180 points, all right, so which leg will give you profit and which leg will give you loss? Pause the video and do your exercise, right? Pause the video and do the exercise. Let's take an example. Let's say a market was standing here, Bank Nifty gave a 182 points up move. So pause the video and just check which leg will give you profit and which leg will give you loss. Okay, okay, so now ideally the P leg will give you profit, right? This will give you profit. So maybe let's say this has become 300. See, I'm just taking a very rough example, friends. I'm not sure like what. See, it all depends when you deployed the trade. If it is like Monday, Tuesday, Wednesday, Thursday, I'm just for the example I'm just taking. So this 385 might become, let's say 435 something. Let's say 435, because this is your testing side. Right, this premium will increase, this will decrease, and this will increase. Got it? So now net you are at a profit of 50 rupees here, right? You might be at a loss of maybe 45, 60, 50. Let's take 50 rupees. So net you are at a zero cost to cost. But don't you think your trade is imbalanced now? Don't you think your trade is imbalanced now? Though you are at cost to cost, or maybe like minus 300, or maybe based on the VIX, how the market gave the momentum. Was it like very slow momentum, or is a quick momentum? See, there are like too many factors involved in terms of getting to a profit. It can be minus 300, all right, or it can be plus 300. So what I meant to say is like, even if it is like 0, even if it is minus 300, even if it is plus 300, but your trade is imbalanced, because the delta of the call side will be high and the delta of the put side will be low. So just in case if it makes another 100 points, this premium will go, increase like anything, because the delta of the call is very high and the delta of the put. So maybe the kind of pace this will decrease, right? But the pace which the C premium will increase will be more, because the call side delta will be more, the put side delta, because maybe let's say this is like 0.5, this one would be like 0.3, because this is a sort of not the at the money rate, but this is your at the money. And if you look at this, your call side is a testing side. All right, so now what you have to do, simple friends, you have to convert straddle to strangle. Stay with me, you have to convert your straddle to strangle. How can we do that? Simple, you have to exit your loss making leg. So what is your loss making leg? Your loss making leg is this one, CE. Okay, you have to exit this CE, and whatever premium you have at the put side, or see, either you can go for put premium, or else you can go for the strike rate. So now friend, what is the strike rate? Market is standing at 36,380. So let's imagine this as 36,400. All right, let's imagine this is round figure 36,400. So you are exiting this leg. To convert this to strangle, what you have to do, you have to sell one more call. But what strike you have to select? Because 36,200 is your put, which is standing at which we have already sold. We are exiting it and we have to sell one more call. Right, so what strike? Simple, 34,000 is a call, so you have to sell. So let's say I'm just manipulating, right? Let's say, what did I say? So this will become 300. Let's say this premium has become 300, and let's say this has become 435. Simple friends, right? So now you have to exit this leg, and you have to, what do you have to do? You have to go and sell a call like 200 strikes. So there is a 200 strike difference, right? 36,000 minus, see, 200 is like almost like 36,400, so 36,200, and then you have to go for 36,600. Okay, what I'll do, I'm just trying to manipulate 36,600. So this is your strangle. So let's say even this is standing at a premium of 300. I'm just trying to simulate, friend. This is not the exact. If you want me to do a simulation, definitely I can do the simulation, but I'm just trying to explain you the logic. First I'll explain you the logic, and if I get some good comments, right, requests, I'll definitely make a simulation, or else you guys can also do the simulation. Not a rocket science. Got it? Now from this straddle we were able to convert it to strangle. Check, the market is again in this center. Initially it was imbalanced, right? We had a straddle shape, right? We had a straddle shape like this. Market was standing somewhere here. The moment we have exited this leg, and then we sold a call either by matching the premium or by matching the strike rate. So what is strangle? So whenever your market stands at 100, this thing would be like 50 would be your sell position and 150 would be your call sell position, and this is put sell position. Let's say this is 100. I'm just taking an example. So what is strangle? Right, 50 points away, 50 points away. That's it. Minus 50 and plus 50. That's what I'm doing. Your market is standing at 36,400. Right. So I have a put already at 36,200. So 36,400 plus 200 would be 36,600. The moment we have done this, we are able to convert the straddle to strangle, point number 1. And also now your what do we say, your current market is standing in the middle of this triangle. Your delta is balanced, your Greeks are balanced. Basically, see, logically we are balancing the delta. When we talk about the delta, right, all the new traders will think delta is a very typical keyword or something. Not. See, basically we are trying to manage the delta, or else we're trying to manage the premium. That's it. Right, because it was imbalanced initially. Now we have made it balanced. Just for the demonstration purpose, I've taken this 300, but it would be more or less like minus or plus 5 or 10%, right? If this is at 300, this might be at 250, or this is at 300, 250, this might be at 300, based on the VIX and everything, right? Now, what is the other thing? Let's say the market, now what did we do? We add almost like 180 points, right? Initially when we divide, you have to follow the same logic. So now if market either makes it to 180 points on the upside, or it makes it downside of 180 points, so we have to do one more adjustment. So what is it adjustment all about? Stay with me. Okay, now your market stands at where? Let's say your market stands at 36 plus, let's say 180. It made a 180 points movement. 36,560. I am just trying to manipulate. 36,560. All right. So now, right, 36,560. What happened? Do you think this is balanced now? See, now your market went. This is imbalanced. The delta of the call is high, but your delta of the put. So this maybe you will be like getting into like. See, it all depends. Either you will be in profit or you will be in loss. That profit and loss all depends on the quick momentum. If it has given a quick momentum, so then you will be in loss. If the market has taken some time in terms of giving like this much of points and everything, so you'll be in profit, or else you'll be at cost to cost, right? So now what? See, now this has become imbalanced because market has again gave a moment of 180 points. This has become imbalanced. So maybe if the market keeps going up, your loss will double and triple because the delta is not balanced, the premiums are not balanced. So now what you have to do? Simple, friends. Again, you have to convert this triangle back to straddle. Yes, you heard the same thing. You have to convert your strangle to back to straddle. That's it. This is all about the adjustments. Start with straddle. The moment it gave your benchmark moment, you have to convert it to strangle, and again if it gives the upside moment or downside moment, it can be both the sides, then you have to convert your strangle back to straddle. How to do that? Yeah, I'll explain you. Okay, now, right, now your market stands here. So what you have to do is, like, initially when we were converting the straddle to strangle, we booked the loss making leg, but whenever you are planning, whenever you want to convert from strangle to straddle, you have to book your profit making leg. So ideally your profit making leg would be this one, PE. So maybe this might be, let's say this might be like 250, this might become 250. All right, this will become, let's say, 350 or 370, 380, because this is your testing side. So now what you have to do is, like, you have to exit this put with the profit, and then whatever the strike, the call is standing, you have to sell the put at the same strike to convert it to straddle. You got my point? So now you have to book this leg and just go to 36,600 and sell one more put. So I'm not squaring off, I'm just showing you. Let's say I've squared off this leg, and now I will keep a check on this payoff. This triangle will again convert to straddle, and also check the vertical line, that will be balanced. Now what I'll do, I'll sell 36,600. Simple, friend, that's it. So now again you made back to straddle. We started with straddle, converted it to strangle. The market went up, again we converted it to straddle. Even you can take one more option. I think by this time, see, you will get into this situation only when the market is giving a moment like this, like slowly, right, throughout the day. No retracement as such, but it gives, sorry to say this, see, ideally the market will, like, it will give a retracement, it will go up, it will give a retracement, it will go up, it will give a retracement, right? In this area, you're not even supposed to do like 2 to 3 adjustments. One adjustment, I think that should be sufficient. Straddle to strangle, or at max strangle to back to straddle. But if you have this kind of momentum, right, slow and steady but upside like this, so then you might need 3 to 4 adjustments. Believe me, friends, if you want, I can do the adjustments, right, I can do the simulation, but I need more comments from you. So if there is no request, so then that doesn't actually make sense. So as and when, see, there are like many comments, but people are not commenting, so I'm assuming that you all guys are aware of it, right? If you need the simulation on this, I think this would be one of the I thought peace of mind straddle adjustments, and that too on the intraday. Or else if someone is very good at doing the backtesting in the Opstra, you just go to Opstra, pick up any week which has given this type of wild movement, and start doing the adjustment. That's it. Start with straddle. The moment the market is here, convert it to strangle. The moment market is here, again convert back to straddle, and maybe if the market is standing here, again convert back to strangle. That's it. Maybe 2 to 3 adjustments in it. This is for the pure intraday. The logic what I've told you is like, what all the premium combined you got, the combined premium you got, you have to divide by 4. I ideally divide by 4. If you are an aggressive trader, you divide it by 3. So very less adjustments are required. If you are a super aggressive trader, you divide it by 2. But I think the combined premium divided by 4 will be the ideal thing, because you will not get into panic. Right, you'll not get into panic. So if you want to deploy the stop loss, right, see, if you want to deploy the stop loss, you can just go ahead and deploy the stop loss also. I'm not stopping. So this is end of the day your straddle management, right? You can just deploy the stop loss in your broker terminal, right, by taking like the stop loss is based on your trading style, your risk appetite, right? So let me take you back. See now, okay, did we finish? Yeah, that's it, friend. So this is all about the adjustment. Start with straddle at 9:30, okay, but you need to have the view of the market. See, you need to have the view of the market, and you should be aware of where is your, so let's say the current market stands here, okay, let's say your current market stands somewhere, right? You should be able to know there is a strong resistance 1, resistance 2, support 1, support 2, right? Your market stands here. You should know what is your first resistance. If this gets broken, what is your second resistance? The other way, if the support gets broken, or else if the support comes, if it respects the support, if come up, right, you have to do your adjustments accordingly. If your support is broken, if it comes to the second support, you have to do your adjustments basically. That's what, see, I can make videos, friend, but there is no straightforward solution. You need to have the view of the market, or else let's say you go to your option chain, you find big pillars, right? You'll find big pillars, right? So maybe map your this point with this big pillars OA built up. Wherever you have the OA built up, go for this OA built up, bigger one, or else maybe 1 to 2 strikes behind this big pillar, or maybe if you have a big pillar, right, OA built up, maybe 1 to 2 strike, because when you have to lose, right, these big fellows have to lose. So try to put them as a defensive mode. If these guys lose, then only you will lose. But you know, right, this big pillars, you will find all those data operators, all those big FIs, right, all those big big players, right? Right, they might be having their own thought process, right? They might be having their own system, right? They might have done a good research saying that this particular strike stands valid, a very good support, or this will act as a very good resistance. Then if you are a conservative, right, take 1 to 2 strikes up, or else you can go to 3 strikes up also. At max, what will happen? Your maximum profit will decrease. If you are giving more preference for your maximum profits, you are treating it as a gambler. If you are a conservative trader, you want to make consistent profit, you have to sacrifice some part of your profit in terms of putting them as a defensive. If market breaks this resistance, this has to break this resistance, then only it will come to your resistance. If you are here, your loss will be decent, but you will end up into loss. Sorry, your profit will be decent, you will end up into loss. If you stand somewhere here, there is an equal opportunity that it will take the resistance and market can come down. Right, you will be like very consistent. Right? I mean, needless to say, I've explained many times. Now, this is all about the strategy, friend. Now, what we have done, we started with straddle, we made a strangle, again market went up, again we made a straddle. Right now, again, needless to say, again same thing. If the market makes a downside movement, you have to convert this to what? Again back to strangle. Right, again the market goes downside, you have to convert back to straddle. How many times and how many times, it all depends on the market view. This is pure intraday from 9:15 right, from 9:15 till 3:30 p.m. watch the market. You will not see, literally in the intraday, I'm just showing you all the adjustment. I think 1 or 2 at max 3 adjustments are sufficient, because I cannot say you, right, no one can guarantee that what type of momentum this will give. Okay, let me take you back to the presentation. There is something which I wanted to discuss with you. Okay, so this is all about intraday straddle management, rule based. This is rule based, that's it. Straddle to strangle, strangle to straddle, that is one rule based. How many points you decide. Total premium divided by 4, total premium divided by 3, total premium divided by 2. 2 would be like very aggressive. You can go for 3 and 5. Right, 5 will be like even more conservative. Right, this is a sort of rule based. That's it. You have only 2 rule based. Right, straddle to strangle with your defined points. You decide that points. Now I'll take you to the next screenshot. This is very important. So what should be the stop loss? You decide, friend, whether you are capable of taking 15 points per lot, 20 points per lot, or 10 points per lot. That's it. You go ahead and just deploy that stop loss in your trading terminal. Right, what did I say? Momentum is very important. So if you have quick momentum, like let's say if you see like bigger candle, even if I say, what did I say, the market should go like this. Right, the market should so the market should go, my goodness, okay, see, like this, slowly, right, slowly market should go. If you see kind of market, like market goes, make a green candle come down, make a green candle come down, then definitely see what is basically straddle we are deploying for sideways. Right, we all have to accept. Right, but still, if the market is giving this type of momentum, not a steep this thing, but still this type of moment, right, it will this type of moment, right, retrace and then go up, then definitely you'll be not in loss for sure. But how many times this type of momentum will come? Right, very rare. Right, 70 to 80% you can be like into this winning zone. So 20% of the market will be like this. So you have to come out with your stop loss. That's it. Do not do the firefighting. And this all depends on your momentum. Downside, I think, upside at least you'll be able to manage, but downside, you know, right, down market will happen like you'll have big red candles, right, down movement, small retracement, again market will make a down movement, small retrace, again a down movement. Right, so maybe just be cautious while doing on the downside, but if the market is making like slow downside like this, right, retracement downside, retracement downside, retracement, right, pullback, retracement, pullback, so then you'll be able to manage this thing. So be cautious. I'm just telling you all the pros and cons. Downside, you know, right, potential of red candles are bigger, so maybe this would not work, so you have to come out of the trade the moment your stop loss is hit. Even on the upside, this stop loss can be based on your trading style. Is it 10 points, 20 points, 15 points? You first deploy the stop loss and then go for straddle. That's not, you can just deploy your stop loss and you can just deploy. Now, theta decay, right? This is very important. That's what I said. Your profit all depends on the theta decay, right? Let's say you are deploying on Monday. What theta decay? Let's say you're deploying on Thursday, friend, or Friday. Let's take an example of Friday for the next week. Friday hardly you will get theta decay. Monday hardly you will, maybe better than Friday, but still it is less than Wednesday and Thursday. Tuesday better than Monday but less than Wednesday and Thursday. Wednesday better than Tuesday, Monday, Friday, but not good, better than Thursday, right? It all depends on when you are deploying this trade, because it's a intraday. You can deploy it on Monday, you can deploy it on Tuesday, Wednesday, Thursday. That's what I'm telling. Theta decay based on the theta, you know the time, you know the theta decay curve, right? This will be like something like this, right? Like this. This is your Thursday, right? This is your Friday, this is your Monday. See the theta decay, right? Tuesday, Wednesday and Thursday. That's it. So this is the maximum 50% or 40% of the theta decay happens between Wednesday and Thursday. This is the area where all the option sellers will do the naked option selling. So many of the people, you know, right, why they do not do the option trading on Monday, Friday, you know, because decay would be very less. So rather than getting 1 rupee, 1 rupee, so they will focus on Wednesday and Thursday, because if you look at this Wednesday and Thursday, you will get 40% of the theta decay on Wednesday and Thursday. So instead of targeting 1 rupees, they target for 3 rupees, right? The remaining they'll do some other trades. So basically, see, this is, friend, this is what I wanted to say, right? You have to be like familiar with the theta decay curve. That's it. This is like, this is your Wednesday, this is your Thursday. So 50% of the theta decay happens only on the Wednesday and Thursday. This is where majority of the option sellers do the expiry trade. They wanted to take the advantage of rising wicks, and also, see, when I say rising wicks, the option buyers, or else they wanted to take the advantage of the theta decay, right? Alerts. This is very, very important, friends. When I say alert, what did I say? Let's say this is your day one. Let's say this is your day one. Okay, Thursday. You should add your alert, friend. You should add a alert at 180 points and one. That's it. First add a alert at 180 points. Forget about the next, what do we say? The next 180 points. Let first add your alert at 180 and at 180. That's it. You don't even need to react until and unless your alerts is it. It all depends. Did it took 1 hour to come to fly here? Did it took 2 hours? Did it took 5 minutes? Did it took 10 minutes? Did it took 3 hours? It all depends, right? If it took only 10 minutes, then your stop loss would have been it. Simple. In 30 minutes, but it took 1 hour, that means you will be in profit, because only to get to 180 or 130, 140 points. I'm just giving you this in Bank Nifty. You can just apply this in also Nifty also. It all depends on, so when did this came here? Within 1 hour, 2 hours. So until and unless your alerts are triggered, you should not be doing any adjustments, because this is rule based. No emotions. Make it rule based and give it a try. Give it a try for, see, when I say rule based, give it a try for at least 10 weeks, 12 weeks, 1 year. Don't do it only for 1 day, and you should say if it works. You should not say this is miracle. If it doesn't work, you should not say this is worst, disaster. You, until unless you backtest it for like 10 weeks, 20 weeks, 30 weeks, right, you will be not able to come to conclusion. Okay. If profit, exit before 315. Why to take the risk, right? If you are in good profit, try to exit without any adjustments, or with adjustments, try to exit. And this is intraday, friends. I mean you have to get, even in intraday, if you're looking at 1% per day, I think you are in a gambler mode, right? Look out for realistic person. Even 0.3% per day, 0.5% if you're very good, if you're able to do the perfect adjustment, this is a very good return. But every time if you're looking at 1%, 2%, you are a gambler, and I do not have any videos for the gamblers, right? And one more thing, this is on the if required, if you want to hold, then add the edges. Let's say you have a big straddle, and let's say you this you have deployed on Wednesday. Next day is the what? Next day is the expiry day, right? If your market stands in the middle, and if you have a good safety on the call side and on the put side, right, you can just convert, you can just hold this trade for the expiry day. And if you're worried that market can come down because of the bad days, you can just add a broken wing fly. That's it. That's it, right? Limited loss on the put side and unlimited loss on the call side. If you have a threat on the upside, simple, you straddle, add a wing on the call side. This is your unlimited loss, this will be your limited loss. That's what I'm telling. And Thursday, that's what you have, Wednesday or Thursday, you have to just or else you convert it to iron fly. Best way. See what I mean to say is like this is for the Wednesday for the next expiry, and this is for the Thursday for the next expiry. Let's say you're deploying the iron fly on the Thursday. Start with straddle, do your adjustments and everything. If the market stands somewhere in the between, convert this to iron fly. That's it. You are good, right? And friends, this is only one adjustments. I mean, if you like this video, I'll come up with more adjustments on this Strangle, on this straddle part. So this is part 1. I can make like 3 to 4 videos for the intraday, which will be like peace of mind trades, right? But what I need is like, see, even the subscriber should increase, and moreover I should what do we say, the comment should increase, the like should increase. And again friends, one more thing, sorry if I'm making you what do we say, I'm asking you again and again, go back to my YouTube channel, right? There is a community tab, right? Go to this community tab, and people are asking like, where is the community tab? Friends, let me highlight this, right? You know this videos, and next to the videos you have this community tab. Okay, and now there is one question, right? So when to have the sessions? I got 60 votes. I'm so happy. At least if I'm like, I'll be like happiest person if I have the 60% on at 7 o'clock on Saturday. That would be an eye opener video, so wherein I'll be trying to cover something on the psychology part, something on the what traits we need to deploy, when to deploy, what parameters we need to consider before deploying. This is going to be like very good video, friend. You guys are going to enjoy that video. This is not an introduction video. This is not at all an introduction video. Maybe I'll spend only 5 minutes giving my introduction video, because what will you get with my name, right? Who am I? See, the only thing which keeps you interested is the content from my side. So I'm just coming up with a small presentation, and I'll just clear out all your doubts. My only focus would be like, let's earn, learn, if required we'll lose only for the initial days, and then we'll get into the consistent profit mode. That's my motto. And the next introduction video, if required, friends, if required, tell your friends, whoever is not part of my video, right, my YouTube channel, tell your friends. That's gonna be very interesting video. So I'm going to just explain you everything about how to start. I mean, basically what are all the parameters before we deploy the trade. I'll be just consolidating all my experience of wicks, of different strategies, right? I mean, different view, your emotions, your psychology clubbed into everything, and then I'll come up with a plan in such a way that you guys will start enjoying the trading. Alright friends, so thank you for watching. So if you want me to do the simulations, point number 1 is like, if you want me to do the simulations, I need more likes. And also if you want me to do a intraday straddle management, like I have another like 2 to 3, I would say 4. If you want me to do that other this thing, keep commenting, keep sharing with your friends, right? I need more subscribers, I need more likes, I need more comments, be it positive or be it negative, right? Even negative, you have to back up with the data. It cannot be blunt single statement. Back up with the data. I'll accept. I'll make one more video saying that, boss, I was wrong at here. All right. Thank you, friends. Thank you for watching my video.